Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation. Let's see if I can get that to roll on here. Oops, nope, there it is, sector situation. It is, let's see, Sunday, January 5th, 2025, the first video of the new year. And I'm going to get right into it. Here is our trusty disclaimer. And here is our trusty Market Rebellion Intellectual Property Rights Notice. And then finally, this is this week's macro measure combined with sector situation. And this is another quick and dirty version because I've still got a lot of stuff happening and boy, just tech issues that just continue to crop up, new computer build, working on that this morning, have a lot of other things I've got to get to as well. So just going to do the best I can. I've been sort of laboring along now for many weeks with various issues, including not feeling well and being pretty sick with it, I guess the flu or something like that. And I'm starting to finally come out of it, I think, but just have a lot to dig out from, as is often the case. So that'll be it for that stuff. Anyway, this should be pretty quick as a result, which should make some folks happy out there. There's a lot of stuff I'd actually like to cover, but again, it's just not going to happen this week. So hopefully I'll get my office and PC and all that stuff back in order soon, and hopefully after this weekend, and then I can sort of get back into a normal flow. It's been a long time sort of out in the wilderness. Anyway, I'm just going to straight up say that I think if we assume a news neutral weekend and news neutral Monday morning, I think we should see ascendance here. I think we should see a resumption of the trend, attempt at least. And I'll go through that. I think that's the tell. There's bigger problems if we do not. We should really see that. Long-term trends are, still intact here. So if we don't get that, now that could be the sign that there's something brewing, or the market maybe got a little too far ahead of itself, and maybe now it needs to just chill out a little bit longer than just December. And then maybe there will be another leg lower. But as of right now, I would say that there should be an attempt at the very least to move things up if we assume a news neutral start to the week. I do want to mention that I do think that 2025 is going to be more challenging than 2024. There were times where we were fortunate enough, I think, to spot some possible issues, little cracks forming, maybe a week or two ahead of time in 2024. So we weren't, I don't think, caught off guard when we did have a little bit of a misstep in the market. But otherwise, we kept coming back with a similar report where, all things being equal, they should probably keep going. And they really did most of the time. I mean, they just really kept things going most of the time. That's what happens when you have that kind of a year. And we certainly had a very strong year for equities. So having said that, I would not sleep on risks after two back-to-back years. I mentioned that in cocktail hour. If I'm new to all this stuff, I learn what I need to do to play defense. In various ways, because there's no one perfect way to do that, and all situations are somewhat unique. So it's a good thing that we've got guys like Bill Johnson, and we've got Stu, and we've got Scott, and so on and so forth. And you can talk to Ryan and Greg in webinars. And I just want to wish everyone a healthy, happy, and prosperous 2025. So on that note, we're going to wrap up the quick PowerPoint, get into the charts. Let me just take this down here. And I'm going to start out with the same screen. I think it should be screen two. So yeah, I've just got, I still have issues where I don't know if it's a Windows issue, or anyway, it could be combined with Thinkorswim. I think I'm maybe just overtaxing Thinkorswim straight up, and there's nothing, it's the hardware was going on my older PC. I think I was overworking things, but somehow, and so I needed to replace the motherboard, which led to an entire rebuild with the newest stuff instead, because I just thought, why go back in time to 4 or 5-year-old, well, 5-year-old technology when you could just upgrade to the latest and greatest. So that's what I did. Anyway, I've got activate windows down here because even though I'm on the same SSD and all that stuff, I guess it doesn't recognize me for whatever reason. So I have got to take care of that too. So I'm still, there's all kinds of little things like that, and like graphics card issues and little snafus I'm dealing with to try to get this thing right again, and then try to convert over to trading view as much as possible, and other things. But easier said than done, just time consuming, and don't have all the custom stuff in trading view that I have in thinkorswim. Anyway, having said all that, we'll do the best we can. We're starting out with the SOXX. I tried to cover this in cocktail hour, but I do really think this is the most important factor because this has really led the charge the last couple of years. And then we got into the summer, and things peaked out as they often do, kind of in earnings season, or maybe just in front of when earnings would peak themselves in terms of the number of companies reporting. And then we've been in this corrective mode on the SOXX ever since. And it's obviously it's a real leader. And especially these days, and you can see that it's got that symmetrical type triangle that's there. I switched my defaults to hopefully a better color that helped the trend line stick out a little bit more. And so this thing's tried to break out many times, as you can see, and it just continues to it fails sort of in this 53 and change area, a few times lower, but it's getting really wound down to the apex of this triangle. So we're this far into the triangle, if something should happen relatively soon, you don't often go through and out and not do anything. Could happen, but usually when you're this deep into it, it's something's imminent. That could be a false breakout. So obviously we have to keep our eyes on that facet as well. That could certainly play out that way. But the incoming trend is obviously very strong, right? So these are multi-year charts we're looking at. I'll go to a weekly, and you can see that if you go back here to all the way to the left side, go back to 2020, strong trend, corrective action, much higher low, excuse me. So this trend has really been in place for some time. We can probably, even go back further. And then even if you just take the most recent few years, which bottomed here a few years back in the fall of 22, there's big rally, right? Corrective action, big rally, corrective action. We've been stuck in the corrective action, but the trend is on this weekly, right, is still up. A lot of your short-term SMAs are flatlining, which you would expect even on a weekly, considering how long it's taken for this consolidation to sort of wind out to where it is now. It's been about half of a year, so no surprise that the 10, 15, 20 week are all flatlining at this point. And you still have a rising 50 there in gold, and all of your other SMAs are still upward sloping. So, excuse me, having said that, right, the presumption is that if and when they do resume, trying to ascend, trying to move back up, you would expect the breakout to continue higher, obviously, rather than lower, and you'd expect the trend to continue. That would be, I think, your default position, unless you've got really good reasons to believe that. I don't think it's going to actually play out in textbook style, in the style of in the direction of the incoming trend. I usually have to have pretty good evidence to really want to go against the trend myself. If I don't look deeply into something, I'm going to really stick with, no, the trend's going to win out, because it does so often, and it just has over the course of my career. So that would be my expectation by default. But in this case, you may have some insights. Maybe you think that the hype has gotten too far ahead, and that's why, despite the major index ETFs making new all-time highs, that is exactly why semis haven't done anything. You could make that argument, and you could say, see, that's really showing us that there really is a problem there, and they can't do what the major index ETFs, especially the Qs or whatnot, have done. So there could be some truth in that. I can't say. I don't know enough about these companies, the true fundamental nature of them. My assumption is generally that companies are playing fast and loose with accounting, and that's encouraged because there's essentially a tacit approval, and as long as they don't get caught, everything's great. Analysts don't seem to really want to look into anything deeply, say a bad word. Certainly the government is always well behind the reality of everything. So none of it really matters. So in other words, it's the same old story. Just go along with the program, and that's how you'll do best, right? Even if you know there's a good chance that something's bogus here, there, or everywhere, it really doesn't matter in the short run. No one really seems to care about that stuff, even if it's obvious to, let's say, more diligent researchers or what have you. And I can't say that it is. I just have heard the rumors repeatedly that there's a lot of bogus stuff happening in semis land. So I guess in the end, you usually find out. It can take years, but you do get revelations. But again, they're so far after the fact that if you're fighting against it based on that in real time, you can often get not only chopped up but annihilated. Excuse me. So I think this is really setting up, and of course, the big name of them all right now is the Nvidia, and that is finally taken back, and it's overcome the 50-day there in gold. Really shot through. We were lucky enough to have it in a couple different services as a trader recently. UOA, I think Pro had it, and I think that Rebel Pit Pro had it. So that's good, and it's showing you something now, and it could be right trying to make that move now that this breakout attempt has started. There's really not a lot in its way. You've got a couple of former highs, but as we've said before, this thing could quite easily be right back at the all-time high or near it with just a couple of good days, the way that it can get going. And of course, that's going to create a positive feedback loop, not only in semis, but in tech and in the market in general, usually. And you can see that this is on a longer term daily chart. And really, almost all of your SMAs are still upward sloping in terms of the long ones, 100 on down through the 200. But even the 10, 15, 20 are on the cusp of turning positive. And I would argue that the yellow or gold 50 is flatlining. So it too would probably start turning positive quickly. So for the people that like the SMA profile to be really in sync with rising SMAs, I mean, it's really close to doing that. So that's why I'm essentially arguing that there should be a resumption, because this leadership area with the leadership stock is really on the cusp of resuming acting that way. And I think if we just dart to something we use as a market proxy probably the most, which would be SPY. Well, actually, in this case, QQQ may be a little bit better to show. Let's show this a little bit better here. I think hopefully this is blown up enough, but if you look at this, you've got these similar lows. You've got the old tried and true false breakdown below the 50. Again, this is often the chase out maneuver. You take out the former low. People that are trading against the former low either give up on their longs or they brings in fresh shorts. By the end of the day, the gang works it back up towards the 50. And so people are left hanging. And then suddenly you have this sort of inexplicable, let's just buy everything in tech Friday after really not having a wonderful start to the year. So pretty predictable in the sense that, right, they don't want the year to look rough. Start of the year to look rough, excuse me. They get the false breakdown, the takeout of the low, flush people out, and then reverse it. Typical gang 101. And now, right, I think on this second sort of cluster low that we've got here versus this low, you have slightly improved readings that are starting to click in versus the worst readings over here, slightly improved overall. So nothing incredible there, but slightly improved. They got the flush out, as I've said, and now they've got the above the 50 holding strongly, and they're really close to potentially working up. I mean, you're one decent day. I mean, you could do that on the opening. You're one decent day away from putting the 20-day in light blue, which is essentially exactly where this resistance line is that I've got, you're really close to breaking that out right there. And then of course you'd start looking at the highs near here, that intermediate high, and then if they can get this back up. So this could very easily, excuse me, right the ship technically very quickly. There's some positive signs that would make sense that it would. You've got sort of this double bottom with a little bit of, I guess you could make a slight argument of positive divergence. You know, not the most forceful argument, but maybe you could make one there. And so that really should work its way up. Now, can they break it out? You know, I think that's the big question of there should be that's why I'm saying there should be an attempt to work this thing up and through the way things are setting up right now. And I don't know if they will. I mean, I would think that they will. I think if you look at to kind of support, excuse me, to support that, let's go to here. And this is a quick look at breadth we often go to. And well, this is in our way down here, but you can see that the trend of things is generally improving. And I did mention this, just a quick look at one market breadth screen that I keep. And this is, I think, helpful. You know, this is showing me that a lot of the recent weakness hit its worst point to this point, and that under normal circumstances, when you start to work your way back up the way we are, let's pick out a low here where we bounce. You can see that you hit some rough patches, but then things started to improve and eventually there was follow through from the market doing that. Excuse me. And so that's the same thing sort of as over here where there was a low. You could see that you don't really zip right away, but generally your breadth improves the next few sessions. If you're looking down at all these measures, they're all slightly improving. And then eventually the market takes off more. You know, and I think that's what you would expect, right? Given that the trends remain intact. So that would be my assumption. Again, news neutral is that there should be an attempt, I think, to work these things up from here. And we can go back to a better chart. So I think that SPY, you know, that should definitely try to work its way up. I don't know if it's out of the woods, right? That's the question is, are they going to come back? That I think will be the telling sign. Obviously, if they can't get through this 20 or this resistance line that's up here, they can't get through there, then you have a bigger problem if you're a bull, right? So you kind of have this leg down, you have this rally attempt that fails, and then that probably leads you to, excuse me, to another leg lower. And then that might bring about, given how long this has taken, the magnitude of it, that could bring about your sort of test of a rising 200 early in the year. And it could bring about even more of a, maybe a flush out maneuver. We haven't seen a test of that in some time, right? I don't think, my recollection is that you have to go back quite a bit. Let's see how far back we have to go when the daily tested the 200, which is the purple SMA. And yeah, you got to go back. I mean, we didn't do it. And as a matter of fact, we didn't do it all year, right? So you have to go back towards this area here in 2023, which was near Halloween of 2023. So that's the last time you were anywhere near the 200 day there, represented by the purple line. So it's been a while. Not that has to happen on a regular basis. It's just that if you're going to have a good year, and you had two back-to-back years with the kind of performance, excuse me, that we did, if you're the gang, you might want to do that type of a shakeout early. You get people shaken out early and spooked and thinking, hey, this thing isn't really looking that great. Then you create a scramble effect later in the year when a lot of them still haven't picked up on the fact that you're moving the market back up the way that you normally do, you being the gang in this case. But that's what I would expect. I think we come into the week, we expect this to try to make a rally attempt if we get a news neutral developments over the weekend and on Monday morning. If it gets through the 20, great. See if it can hold, see if it can take out this high, how it behaves up there. If it's just a failed attempt to reclaim the 20 and right back down, clearly not good, right? Clearly that makes it a little more defensive. But as I said, with market breadth improving, I would think that there's a legit attempt, and they should have a better than, I would say, a better than average chance of pulling off a little bit more of a rally, given how the improvements are already happening, have been happening under the surface. And speaking of those, let's see if we can pull a sector view in. So here's our grid of 12 that we often take a look at, and you can see that a lot of these things, a lot of them had their downward plunge arrested lately. So I think that's the big takeaway, is that they at least stopped for now. And certain things like energy, which we were fortunate enough to have some UOA in, which did really well actually. Earlier in the week, we caught some stuff, or was it late the prior? We can't remember. Just between being ill and everything else, my memory's worse than usual. But tech really has hung in there. The communications have hung in there. We did have some paper. I haven't added anything in financials, but remember, they're going to be reporting. Wouldn't be surprising with those reporting in several weeks, excuse me, to have a little bit of a anticipatory pre-EPS sort of positive run. So if we get a little more paper in there, I'm going to plan, if this is acting well still, I'm going to plan on getting something in there for that. But yeah, they've arrested, you can see they've arrested it, and they've kind of got these little mini double bottoms, or sort of cluster lows that are sort of hanging in there right now. Doesn't mean it can't fail, but you can just see that they've done some halt of a lot of the sectors, maybe not all, but a lot of them. So this is in the face of, I think, a lot of weak stuff happening internationally and so on and so forth. But once again, right, from day to day, I don't know if how much that will matter. And they're tremendous at ignoring things until they decide not to. So a lot of these things will just linger out there. We may be apprised of them, but doesn't really matter. And I also would have that, excuse me, doesn't really matter to the gang is what I was getting at. But you can see that a lot of these RSI readings are sub 50. And so some of them are even closer to 30. And remember, if you're in a bull market, you don't really typically get really deep oversold RSI readings, things like 25, on the daily, or if you're in uptrends. So getting down into the 30s or low 40s is often about where you get to if you're in a bull market. So you don't really get oversold as much. So you might say, well, this is really not overdone. I see there's more potential. And there is. I mean, you got to admit there is. I think you just don't know if there could be a rollover. News could bring about a rollover further from here, another leg lower. But again, if we assume news neutral, a lot of these things are probably oversold enough. I think the CNN, fear, greed, and other things like that, they did get low enough to allow for a rally attempt. That would be the argument I would make. So things like the big dogs are hanging in there quite well with sort of mini double bottoms in XLK and XLC. So to me, if they get those going and they can start moving energy and financials back up again, things are going to look pretty decent overall. And transports are even hanging in there too, of the biggies that I like to look at. So all that's working. XLU has sort of become a risk on thing in a way because of crypto and etc. Other things. I guess, your data farms, blah, 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 all the things that are happening now. So that's almost starting to look decent again. We did have some paper in things related to crypto. So a lot of bullish paper came in. You could see that this looks poised now in the Bitcoin futures, which, is a pretty good leader that way. And so this does look pretty good. This is a lot like the market where you have sort of a double bottom, slightly better readings, I would say, out of your basic indicators, oscillators here on the second low. And then all you really need to do is take out the high here on Friday's high, and you could be off to the races back towards maybe challenging the high. And this is also, excuse me, a good indication of risk on kind of risk coming back on and people putting money back into things, back into the market, chasing stocks. So there you have it on that as well. So again, considering that this is quick and dirty, I'll jump over to diamonds. We'll take a look at IWM. Diamonds look very interesting because they've been hit pretty hard. You can see that the lowest low is about 421-ish. So they went from 451 to 421. So not quite 7%, but a decent pullback nonetheless. Excuse me. I just can't shake this completely. My apologies again. It's been quite a run. Anyway, trend line right there. You got your resistance line right there. You really should try to work your way up. And clearly, when you've got the 50 and the 20-day right there, basically on top of each other, we should really see that is, I think, the big area. You get through that, and then you can hold. Then you can start talking about good times and things like that, better times. And it should try to at least get up there, I think. There should at least be a breakout attempt. But a lot of these things, as you can tell, they look very similar. Clearly, I haven't mentioned this, but it's almost the same, right? Just the recent low, excuse me, the recent low is your area where you either could brave a short or you could give up on longs. But yeah, I mean, I think it's very clear what the big stuff. This is big for starting to fail. Maybe you invite another leg lower, and hey, we put the worst behind us. We're now holding above the 20 and 50. Things are looking better. Those are your two key levels, and it just shows up virtually in all these things. IWM, even there, you could just use this 150, which is the rust colored line, or you could use that low, which is 217.85. But this, to me, again, you can see the oscillators and the indicators down here looks ready to try to work back up. So I think they're going to try to work this back up without news souring that. That would be right. That would just, it's almost too easy. I mean, it just, everything's setting up that way. It looks like it should happen. And I think you use the low or the 150 and Russ, as I said, as your level of concern, right? Where you say, uh-oh, and then it's so close to the, unfortunately, right, it's so close to the 200 that you don't have much of a trade there. So you can only deal with what you can deal with there. You might get a little bit of a breakdown, but then you maybe have tedium. Sometimes if there's news, you can slice right through a 200 in a meaningful way. But a lot of times without really big news driving it, you'll just dawdle around there for at least a session, if not longer. So it kind of might put you under pressure there in terms of waiting for a further breakdown if that were to happen. But I think that's the lower probability scenario right now without news. So going back to SPY, 100-day, you may as well use the 100-day on the downside, and starting to feel better about things is the 20-day. And it's very close, as we said earlier, to that resistance line. I think, as I noted, right, this is why I would say you should be at more of a DEFCON, almost at, DEFCON 1, where you really want to be ready just in case, because the proximity right now, the way these things are playing out, the proximity between things look really a lot better it's very close by, but things looking a lot worse is also very close by. So you're in a spot where you're not too far away from a very critical level that you could all of a sudden that things could really shift and poorly. So, but you could also shift very bullishly quickly. So should be interesting. Qs, probably the 50. This is pretty far. If you start falling below the 50 again, probably going to want to use that Thursday close. If they can't hold Thursday's close, then you're starting to invite maybe more problems, and you don't want to wait that long on that wick. But clearly, it's the same thing, right? The 20-day is big where this resistance line is. It's all about the same level. You're not completely out of the woods if you get above there. You really want to take out this high and be able to hold above there. But this definitely puts you on better footing. And you're not usually normal session, you're not just one session away typically from all hell breaking loose at that point if you do manage to get back up there and hold above it. But I think that's it. I think you're looking at that, and I don't really see anything extraordinary. If we step back, we can just see objectively just say long-term trend still up. There's been some corrective action. It may have run its course. There's some positive signs out there. The money seems to be flowing back into key areas. They've arrested for now, they've arrested a lot of the downtrends. They're on the cusp of moving things back up, it looks like, in crypto land, which is often risk on. And then you've got the market breadth improvements, the sector arrests in certain sectors starting to work their way back up. So overall, it doesn't really look that bad. It looks, if you said what happens most of the time, which is what I'm essentially doing with the most likely scenario, assuming news neutral, I think most of the time you get a rally attempt and you probably succeed. That would be my this is what happens in most cases. It has to be, just because you look at the market, uptrend over the course of time. And we've been in similar situations to this one many times before, and they the bulls usually win out. So I do think with the whole inauguration and all these different things that are happening around the country, there's more than normal risk out there, a lot more, I think, personally. So I would be on guard for sure with that. But you don't want to just roll too aggressively if we really are on the cusp of if we're on the cusp of a nice little pop back up and really start to move this thing. You don't want to roll too aggressively, too easily. So look to your semis, look to your market breadth. If they get this stuff popping really strongly, you could end up with a really strong move quickly. Now, if does it have staying power if it develops, we'll have to let time answer that for us. But otherwise, I still think news neutral. They're not going to walk away this easily. December was a pretty rough month for the market, and a lot of things look primed to at least want to try to go back up. So I think on that note, and all the struggles I'm having, coughing and so on, which I apologize for, I'm going to wrap things up. As I said, quick and dirty here. I do hope this little video helps you out this week or some week in the future. I want to thank everyone for tuning in. Hopefully we'll normalize soon and get back into a better groove on everything. And that's my goal. And then this will all be behind us. But again, I'm wishing everyone a healthy, happy, and hopefully very prosperous 2025. And I'll see you all through the updates and webinars and so on and so forth this week. So thank you and take care.